I'm Aishwarya Sitaram from the Biocon Investor Relations team, and I would like to welcome you to Biocon's earnings call for Q3FY22. I'd like to indicate that all participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remarks conclude. Should you need to raise questions, please select the raise hand option under the reactions tab of your Zoom application. We will call out your name and unmute your line to enable you to ask the question. While asking, please begin with your name and your organization. Please note that we will not be monitoring any questions on the chat box, but you can raise any technical concerns that you may be facing for our support team to help. I'd also like to bring to your attention that this conference is being recorded. To discuss the company's business performance and outlook, we have with us today the Biocon leadership team comprising of Dr. Kiran Majumdar-Shaw, our executive chairperson, and other senior management colleagues. I'd like to take this opportunity to also remind everyone nature based on management's current beliefs and expectations. That could cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. At the end of this call, if you need any further information or clarifications, please do get in touch with Nikunj or me. I would now like to turn the call over to Dr. Kiran Majumdar-Shaw. Over to you, ma'am.
Thank you, Aishwarya, and good morning, everyone. I welcome you to Biocon's earnings call for the third quarter of FY22. Let me start this earnings call with warm wishes for a happy, healthy, and hopeful 2022. As I reflect on the year that went by, I recall the optimism at the start of 2021 with a flurry of vaccine approvals and signs of the pandemic receding. However, this was short-lived, with the Delta variant delivering a devastating second wave, thwarting the global economy, which was just beginning to recover. Vaccines were deployed across the world to attain levels of protection that would enable revival. When it seemed like the pandemic was reaching an endemic stage, yet another strain of the virus, Omicron, emerged. Omicron, while 3 times more transmissible than the former variant Delta, seems to be far less severe with low hospitalization and death rates. While the outcome of this variant is yet to be seen, mass immunization through vaccination or boosters, an expanded therapeutic arsenal, and lessons from the earlier waves will help blunt the impact of Omicron. This, however, may not be the last variant, and we as a community need to brace ourselves for more variants in the future and continue to adhere to COVID-appropriate protocols. Pediatric trials need to be sped up so that children can also soon get protective immunity. I also encourage everyone to take booster doses when available. The need for vaccines has never been stronger as the world continues to battle infectious diseases. As you are aware, Biocon Biologics has recently formed a strategic alliance with Serum Institute, enabling it to enter the vaccine space. Collaborations such as this, along with our existing COVID portfolio, will enable us to continue to be at the forefront in the fight against COVID-19. Biocon remains committed to provide a comprehensive solution of affordable therapeutics for global healthcare. Let me move to the next slide, where I will now start discussing the key highlights for Q3 FY22. Let me take you through a few of these. For the first time, we entered the prestigious Dow Jones Sustainability Index in the emerging market category for our progressive environmental, social, and governance, or ESG practices. We made a formal submission for corporate sustainability assessment for listing on the DJSI and made it to the emerging markets index with a total sustainability score of 45 as against an industry average of 18, achieving a 93 percentile. We also secured an improved carbon disclosure project rating of B from C, which earlier, as per their 2021 report. We are working to establish a strong ESG framework that can endure the test of time and stakeholder expectations whilst enhancing our responsible corporate citizenship. Biocon has been selected to participate in the government's Production Linked Incentive Scheme 2.0 for the pharmaceutical sector. Under the scheme, Biocon will receive financial incentives of up to 250 crores over a period of 6 years, linked to investments in manufacturing, infrastructure, and corresponding incremental sales of pharmaceutical goods. Several companies had applied for the scheme, and we were among the 55 companies that were selected based on parameters such as manufacturing investments over the last 10 years, number of regulatory approvals, R&D spends as a percentage of manufacturing revenue, etc. I would now like to turn to certain management updates. Biocon Biologics has appointed Matthew Eric as the Chief Commercial Officer, Advanced Markets. Matthew's appointment reflects our strategic intent to build commercial capabilities in the advanced markets of North America, Europe, Australia, and New Zealand. Matthew will be based out of the US. A second management update relates to Dr. Mandar Ghatnekar, who has been appointed as Chief Digital Transformation Officer at Biocon Biologics and will be leading their IT and digital solutions initiatives. Ajit Pal Singh has joined us at Biocon Biologics as Head Branded Formulations, India. Ajit will be responsible for spearheading near-term plans and long-term strategic investments for our existing portfolio, as well as building brands to drive sustainable growth. I will now move on to the financial performance this quarter. At a consolidated group level, revenues for Q3 FY22 were 2,223 crores versus 1,885 crores, a year-on-year growth of 18%, and a sequential growth of 14%. Revenues from our biosimilars business delivered a robust year-on-year growth of 28%, while that of our research services business grew by 10% and generics revenues grew by 7%. We recorded a forex gain of 19 crores this quarter as compared to 6 crores during Q3 FY21. A loss of 77 crores arising on account of mark-to-market loss on Biocon Biologics investment in Adagio Therapeutics is reported for the quarter. We also recorded a gross R&D spend of 178 crores for this quarter, which corresponds to 12% of revenue ex-Syngene. Of this, 138 crores has been expensed in P&L, while the balance amount has been capitalized. Core EBITDA margins, that is EBITDA margins net of licensing, forex, mark-to-market loss on Adagio investment and R&D stood at 33% compared to 31% in the same quarter last year. This is on account of an improved performance in both biosimilars and generics. EBITDA for the quarter was 537 crores, a 25% year-on-year growth. The EBITDA margin stood at 24% as against 23% reported in Q3 FY21. Profit before tax or PBT for the quarter stood at 269 crores, up 14% versus 236 crores during the same quarter of last fiscal. Net profit for the quarter stood at 187 crores versus 169 crores in Q3, a growth of 11%. However, if we adjust for the mark-to-market loss on investment in Adagio, Our EBITDA during the quarter would be 614 crores, reflecting an EBITDA margin of 28% as against the reported margin of 24%, previous margin of 24%. Profit before tax for the quarter would be 346 crores as against the reported 269 crores. Let me now turn to the performance of our business segments during the quarter. Let me start with generics. The generics segment delivered quarterly revenues of 607 crores, indicating a sequential growth of 15% and a year-on-year growth of 7%. Profit before tax for the quarter stood at 67 crores versus 53 crores in the same period last year, and PBT margins were up 11% as against 9% in the previous fiscal. The business saw a robust sequential growth due to the successful launch of our vertically integrated complex formulation everolimus in the US, which was also a day one launch for its 10 milligram strength. We also had a good uptick in our API business. The launch of everolimus was also a key driver in the year-on-year growth of the segment. And since the launch, the product has gained traction, and we expect that this product will continue to contribute to the growth of our generics portfolio. During the quarter, operations, which had been impacted due to COVID-related challenges in previous quarters, started normalizing. However, the business continued to face pricing pressure headwinds in various markets. While margins improved for the quarter, there was an impact on profitability due to higher raw material costs, particularly solvents, and higher costs of logistics. I think this has been felt across industries. During the quarter, we also continued to make progress on our product pipeline, following the remote interactive evaluation conducted by the US FDA in the last quarter. For our oral solid dosage manufacturing facility in Bengaluru, we received an AND approval for mycophenolic acid delayed release tablet at the end of November. During the quarter, we also received the dossier approval for everolimus tablets and fingolimod capsules for the EU market. In line with one of our strategic priorities to expand our presence in newer geographies, we signed a partnering deal with Tabuk Pharmaceuticals to commercialize several specialty generic medicines in the Middle East and North Africa region. This is an important milestone for Biocon as we strengthen our commitment to provide affordable healthcare for patients around the globe. Our greenfield immunosuppressants API manufacturing facility in Visakhapatnam remains on track to be commissioned in FY22, with qualification and validation in FY23. As we add new capacities, accelerate new product launches in key markets supported by our efforts for driving cost efficiencies, we expect continued growth in the quarters to come. Now let me turn to biosimilars. Biocon Biologics recorded revenues of 981 crores for Q3, a year-on-year growth of 28% and a sequential growth of 32%. EBITDA for the quarter was up 12% year-on-year at 236 crores. This includes a mark-to-market loss of 77 crores made from the investment in Adagio at its IPO. Core EBITDA, including R&D, forex, licensing income, and mark-to-market loss on Adagio investment, stood at 363 crores, which is up 27% year-on-year. Core EBITDA margin was at 38% for the quarter, in line with the same period last year, demonstrating our ability to profitably grow this business. Profit before tax, excluding the mark-to-market loss on the Adagio investment, stood at 201 crores, which is up 82% year-on-year. The strong growth in revenue and profits are backed by robust demand across products and geographies. We launched our 351K biosimilar insulin glargine in the US, paving the way for interchangeable biosimilars in the region. The US Court of Appeals for the Federal Circuit has ruled in favor of our partner Viatris on all the five Sanofi Lantus Solostar device patents, vindicating our long held position on intellectual property. We expect significant uptake of the product in the US, evidenced by several commercial arrangements already in place. Semglee has received preferred status in the national formularies of key PBMs, including Express Scripts and Prime Therapeutics, and will also be offered through Walgreens Prescription Savings Club. Viatris has established a range of options to support patients, such as patient assistance and co-pay programs. We continue to see gradual improvement in the market share of Ogivri in the US, which was pegged at 11.4% in December. It continues to be a leading biosimilar trastuzumab in Australia and Canada. We are witnessing growth from Europe with steady improvement in performance in the markets where Viatris is present. We have seen impressive growth in the Biocon biologics-led commercial franchise in emerging markets. We have made good progress on our strategy of entering new markets, enabling sustainable growth in our B2B business. For example, we have forged commercial partnerships for biosimilar bevacizumab in about 20 countries post the EMA approval in April 2021. The branded formulations India business, which is our front-end commercial engine in India, continues to see healthy growth with 9 months revenues for FY22 exceeding the full year FY21 revenue. We continue to progress our Wave 2 R&D pipeline and expect some of them to enter the clinic this quarter. Encouraged by the demand for our current insulins globally and the pipeline ahead of us, we have initiated investments for the expansion of our insulin manufacturing facility in Malaysia. Our strategic alliance with Serum Institute Life Sciences, which involves a merger of Covishield Technologies Private Limited into Biocon Biologics with effect from 1st October 2022, is on track. We will be submitting the relevant regulatory filings this month. To summarize, the strong performance of the biosimilars business, underpinned by its robust business fundamentals, validates its long-term potential. There are multiple near-term catalysts, such as revenues from the Vaccines Alliance with Serum Institute and the US launch of biosimilar bevacizumab, aspart, and adalimumab in the future, which will further propel the business. Now coming to novel programs. Equillium, our US-based partner, is on track to initiate a pivotal study in early 2022 for the use of itolizumab in first-line treatment of acute graft-versus-host disease. Equillium is also conducting a proof-of-concept study for its use in lupus SLE or lupus nephritis. SLE is an autoimmune chronic inflammatory disease with over 100,000 patients in the US and over 45,000 patients in India, many of whom do not respond to standard available therapy of steroids and immunosuppressive drugs. We believe if itolizumab can address this unmet need with better remission rates, more durable responses, and a better safety profile. Our clinical strategy for itolizumab was further supported by the recent publication of a manuscript in the Journal of Clinical Investigation, highlighting the contribution of CD6 ALCAM pathway in lupus nephritis. After observing positive trends in the Part A of its Phase 1b Equalize study for SLE and LN or lupus nephritis indication, Equillium has also now expanded the Part B portion to clinical centers in India after obtaining approval from the Drugs Controller General of India. During the quarter, our Boston-based associate, Bicara Therapeutics, completed enrollment for the dose-finding part of the Phase 1 trial for its lead program, BCA101 as a single agent and in combination with a PD-1 inhibitor. Bicara established all doses tested to be safe and tolerable for both monotherapy and in combination, and is on track to open 3 expansion cohorts at the start of 2022. I now turn to our subsidiary Syngene, which hosts our research services business. Revenue from operations stood at 641 crores for the quarter, indicating a year-on-year growth of 10%. Profit before tax for the quarter increased by 10% year-on-year to 128 crores. Discovery services and the dedicated centers were key growth drivers, while development services and manufacturing services delivered sustained performances. A significant milestone for Syngene in the dedicated centers was the extension and expansion of the long-standing multidisciplinary research collaboration with Amgen until the end of 2026. Last year, BMS also extended their contract by 10 years. This confirms the stability of both relationships and demonstrates the strategic value that Syngene provides to help their partners build successful pipelines. Syngene is well positioned to meet the evolving requirements of the client, and the company has raised their revenue growth guidance for Q4 and for the full year from mid to high teens. I would now like to conclude my remarks by saying that we are tracking well across our businesses, and we are confident that we will end this fiscal on a strong growth trajectory. I once again wish you all a happy, safe, and hopeful 2022. And I would now like to open up the floor to questions. Thank you.
Thank you, ma'am. While we wait for the queue, I would like to remind everyone that should you need to raise a question, please select the raise hand option under the reaction tab of your Zoom application. We will call out your name and unmute your line to ask the question. First question is from Damayanti Kerai from HSBC.
Hi, good morning. This is Damayanti from HSBC Securities, Mumbai. So thank you for the opportunity. And my first question is regarding your launch of singly interchangeable product in the US. So since you launched the product in November 2021, so can you share like what kind of response you have seen so far from your competitor in response to your interchangeable launch, whether they have gone more aggressive in terms of pricing offer or some other changes which you might have noticed in the market? Thank you.
Hi, Damayanti. This is Shreyas. Thanks for your question. I think as we've discussed in the past, many of these formulary listings happen in that August to September, July to September time frame. And we were very successful. Our partner, Beatrice, was able to win a preferred status with Express Scripts in the formulary contracting cycle, which allowed us to get a status displacing Lantus, which was the preferred brand until then. So clearly, we've been able to displace some of the incumbents and move them out from that preferred status. So we really see 22 as a place where we will be in a position to move the market in the manner that we projected. So we're not really looking at a competitive dynamics playing out during the course of the contracting cycle with the accounts that we've been able to secure.
Thank you, Shreyas. And my second question is again on Simply. So obviously you have got listed in some of the biggest PBMs in the US. So any update on your progress towards moving to government program, whether it's Medicaid or Medicare?
If you looked at the launch strategy that Beatrice came up with, we came up with a dual brand strategy. And that dual brand strategy was essentially to address exactly the kind of question you've asked, where we address patients in all types of segments, regardless of their insurance or their payment plans. whether it is in the commercial space or the formulary listings, which is roughly about 30% of the market, or the Medicare Part D, which you just referred to, which would be around 35% of the market, or the government supported programs, or the part the managed Medicaid part of it, which would be another 15 to 17%. But with these initiatives and the two-brand strategy that we've come up with, and the programs that Beatrice has launched, whether it is the senior citizens programs or the Walgreens prescription saving programs, we are looking to cover patients across the spectrum, regardless of their co-pay strategies, so that we can really provide this affordable biosimilar interchangeable insulin to patients in the US. So it's a very comprehensive strategy to provide this insulins to people with diabetes in the US.
Thank you. I'll get back in the queue.
Yeah.
Thanks, Damayanti. Next question is from Tarang Agarwal from Old Bridge Capital.
Hello, good morning. Two questions from my side. On appointment of Matthew, just give me a second, please. Yes, on appointment of Matthew, if you could give us some broad brush on the scale of commercial capabilities that is being envisaged on the front end, and would the focus be concentrated on specific therapeutic areas?
So let me respond to that, Tarang. I think if you've seen over the last few quarters that we've come back, we've actually built our leadership team and leadership capabilities across all parts of our business. And during the last 3 quarters, we've set up our emerging markets commercial front end with very strong leadership. In fact, even today's Kiran's announcement saw that we've strengthened our commercial front end further in India, despite the fact that we've performed very, very strongly in the current 3 quarters, which have exceeded the full year revenues of last year. Our conscious strategy has been that we expand our presence into advanced markets, and Matt joining us is basically to add into the vision and the strategy that we had set for ourselves, starting with our recombinant human insulin, which becomes our first product to get into the US market, and then to get our Wave 2 products across the various geographies where we intend to commercialize our products across the world. We have always developed a global biosimilars business. And now that we've strengthened our presence in emerging markets in India, we're looking to expand this to the advanced markets as well. So that's where the Matt's joining us fits in there.
Got it. The second on Semglee, if you could give us some sense on the strategy behind launching branded and unbranded glargine.
Yeah, so I just explained on a previous question to Damayanti. I think the important part was to cover patients or people in all types of insurance coverages that they would have, regardless of whether they have a particular formulary listing and a coverage through a particular form or not. Now, because we may have a coverage with some of the largest formularies, the national formulary listing with Express Scripts and with Prime Therapeutics, but there could be people who would be in need of Semglee or the insulin glargine interchangeable who may not be in this coverage. And that's where we brought in the second brand, which then allows us for a much wider, broader coverage, regardless of any particular patient's insurance coverage. So that's really the thought behind it.
Thank you.
Next question from Surya Patra, Phillip Capital.
Yeah. Thank you for the opportunity, sir, and congrats for the good set of numbers. My first question is on the sequential swing in the biosimilar business, what we have witnessed. Is it fair to believe that the larger chunk of that has come from the interchangeable Semglee? And a related question on that. So the interchangeable branded version, Semglee, what it has been launched at double the price of the earlier version. So what difference that we should see in terms of profit efficiency going ahead, since this is going to be a kind of a very chunky contributor throughout this calendar year, given the exclusivity that we will be having.
So, Surya, I think the two questions, the sequential growth that we've talked about, I think we've had sequential growth last 3 quarters. We've essentially had sequential growth all through, and fair to say that while we've had growth in all our segments across products, I think a large part of our growth has also come because of the launch of the insulin glargine interchangeable in the US. So that's a fair comment. And we expect some of this to stay as we get into calendar 22. So this kind of increased sequential growth is something that could be driven by insulin glargine. So that is a fair point. The second aspect is where you talked about the margins and whether there is an opportunity to see that these margin improvements will happen over time. I'll defer that question to Chini to respond to that second half of the question. Chini, over to you on that part.
Surya, yeah, hi. Sorry, I didn't catch the second half of the question, but yes, the sequential growth is for Q3 particularly is on the back of the starting supplies of interchangeable insulin for the US markets. We see that picking up as we go into 2022, and of course the profit shares that will flow through as this converts into in-market sales. Because right now what you see in our Q3 books is just a supply of product from Biocon Biologics to Viatris. In terms of pricing and profitability, we don't want to comment on that. And there is, I would say, there's always a gross price, net price, but we don't comment on pricing.
Sure, sir. So, I think there are a couple of new initiatives that has been taken by the company. So, if you can just provide us some clarity on those initiatives. Let's say, for example, the PLI thing, what we have heard. Can you share something about that? What is the kind of investment commitment? The nature of the product that you would be targeting? Whether it is the future initiatives on the PLI front is entirely fermentation oriented, something on that front. This is one, the new initiative I would say. Secondly, even on the vaccine foray through the Serum Institute Alliance. So how confident you are in terms of optimally utilizing the targeted capacity of the serum, that is around 10 crore doses per annum, starting from, let's say, second half, what you have mentioned. So that is the second. And similarly, the third point I would ask here is that how should one look at this 150 crore losses, what has been booked so far, relating to the investment into the Bicara? So if you can clarify these three new initiatives, then I think that will give a kind of a greater clarity about the next year's performance.
Maybe Siddharth, you would like to address some of these queries? PLI and Bicara, and maybe Chini could talk about the others.
Sure. Kiran. So Surya, the PLI scheme, as you know, the government has announced the scheme, the second scheme, which was not necessarily linked to any products. It was linked to, it was a broad-based scheme which covered complex generics, biosimilars. And as a group, we are investing heavily in CapEx, whether it's Syngene or biosimilars or generics. And in the category B, where we had applied, we were the top company which was selected, and the benefit would be 250 crores, which will come over a period of 6 years on incremental sales. And the revenues which will be eligible for this would be coming from both generics as well as biosimilars. Now, there's no change in strategy as far as investments are concerned in CapEx, because we continue to invest, let's say, in generics itself, whether it's in fermentation or synthetic or peptides facilities, and in insulin in Malaysia, which obviously does not qualify for PLI benefit, but other antibody facilities for biosimilars in India.
Sure.
As far as Bicara's investment is concerned, we have residual carrying value of investment in our books of 25 crores, which we expect would be going through the P&L in the fourth quarter. Bicara is also in discussions with third-party investors to raise a fund to advance its pipeline. As we had said that, Bicara will look at external fundraise for future R&D expenses, and we expect some movement in the fourth quarter, after which we will see that those expenses will not be on the consolidated P&L.
Sure, sir. My last question.
Sorry, I'll take the vaccines question.
Sure.
Yes, of course, we see very strong demand for our vaccine portfolio. Initially, of course, there's a bias towards the COVID portfolio, then rolling into the next-gen vaccines, and then progressively as we enter developed markets, which are in our medium to long-term plan. To convert that into financial terms, initially at the pricing, we believe this could play out closer to the 100 million units could translate to close to $400 million of revenues and profits, which is in line with our core EBITDA margins, which is in the mid to high 30s.
But whether you have started some marketing effort there, sir, why? Because just marketing around 10 crore or 100 million doses from nowhere, whether it would be a staggered ramp up, that is why, or you have taken up your marketing efforts seriously and hence you are confident to utilize optimally even in the first year?
Yes, there's a lot of joint commercialization efforts underway, and we believe that the revenues will start to play out right from the start of the merger. I mean, right now it will be through CTPL, and as CTPL merges into BBL, we will record the revenues.
Sure, sir. Yeah, thank you, sir. Thanks a lot.
Thank you, Surya. Next question is from Shyam Srinivasan from Goldman Sachs.
Hi, thank you for taking my question. Just quick 3 questions and I'll stop. So first one is on, if you look at biosimilar pricing, has been again, if you look at the latest 3Q data calendar from CMS, another 6-7% decline QOQ. Brands have taken 3% cut. So both the 2 sets of both brands and biosimilars are taking significant cuts. If I were to plot the 15-16 quarters, since biosimilars have launched in the US, we have seen up to 50% drop in prices. So just want your comment on how you look at pricing. In fact, if I look at Biocon, it has taken some of the lesser pricing. So how should we kind of look at price versus volume? What are some of the aspirations? So that's question number 1. Question number 2 is on capital allocation. We've had some press speculation around you looking at Mylan's biosimilar business in a combined entity. If you could care to talk about that, or at least give us what are your capital allocation priorities are. And the third question is on the split of Biocon Biologics revenue this quarter, EM versus DM, and how does this progress? Thank you.
Hi, Shyam. Thanks for your question. I think let's talk a little bit about price erosion first. And I think the important thing is that, and I've talked about this before, the general acceptance of biosimilars, particularly in the US, which was something that was a big question mark, has been quite resoundingly addressed, that there is no concern around biosimilars acceptance. So that's a very positive takeaway. We're seeing multiple players enter the market and be successful now. There is acceptance of that. We also aren't seeing a very steep decline. We were expecting, with increased competition. That's the whole idea behind having biosimilars. That's the whole idea behind having competition, to see that there is a more affordable option to the brand. And we have expected this all along, and we've signaled that right from the beginning. The US has been a more accommodating, steady market where price sanity has prevailed. If you look overall, and we've basically between Beatrice and us, our strategy has been to preserve value as we've gone through. We've not chased market share in pursuit of that. We've not eroded value like many others. So we've continued to hold on to that, and our market shares have held steady in that 8 to 10% market share range that we've had, whether it is in Fulfilla or whether it is in Ogivri. And we of course see it now inch forward with Semglee, with the discussions we just had now recently. In Europe, we see a slightly different trend. It's not a homogeneous market; it's a heterogeneous market. Several market archetypes, where you see that where there is a single win tender, particularly in the Nordics, you would see a more aggressive pricing trend, and you would see a winner takes all kind of a strategy, and then there is more aggressive pricing in such markets when in certain cases. In most other markets within Europe, you have also seen a position where there are mandated price reductions year on year once there's a first biosimilar launch. So some of these are predicated, some are pre-decided, and we are seeing that given that there is a 10 to 25% reduction, which you would have factored in, the market remains in line with where we had expected it to move. Emerging markets sometimes have surprised us with the kind of price that they have held on to, and that's where we've also seen encouraging signs for the products that we've brought to market. Kiran talked about signing 20 new partnerships in recent times in emerging markets, and we are encouraged with the response that we've received in several markets and the partners that we are working with. So on the whole, I would say price erosion is along the expected lines, and really something that biosimilars were expected to do when they, as a basic principle, to bring them into the market. So that was the first question. Let me answer the third question that you talked about, where I think you asked us about the EM versus DM split for the quarter. And I think what's been our case so far is, with the launch of the interchangeable insulin in the US, we are starting to see that the needle start to move towards the developed markets. But it's still at this stage, I would say, given that we've had a strong emerging market performance, it's more or less at this point around that 50% mark. So it's balanced still. We expect it to probably start moving as we gain more supplies into the US with Semglee and other products. I will leave the question on speculation out at this time because there's no point in responding to speculation. But unless Arun or Kiran want to respond to anything beyond that.
Maybe the question then on capital allocation, Shreyas. There are the priorities.
Kiri, could you want to respond to the capital allocation part of it?
I mean, of course, there is two types of investments needed to be successful in the biosimilar market, or let's say three if you add the commercial infrastructure. So the R&D, the CapEx, and the commercial infrastructure. As you've seen, we've been investing quite significantly in building our CapEx, capital infrastructure to service both the developed and the ROW markets. So a significant amount of investment has already been made. We expect that to play out over the next 2 years as we commission one of the large-scale monoclonal antibody facilities in the coming fiscal, and another facility in FY24, FY25 timeframe. R&D investments, you will see that going up as we bring some of our wave 2 molecules into the clinic. But clearly, there is a lot of investments going into this, both in building the capital infrastructure, capex, and the R&D investments needed to give us that medium to long-term growth from wave 2 and wave 3 molecules.
Thank you, Jenny, and all the best.
Thanks, John. Next question from Prakash Agarwal, Axis Capital.
Yeah, am I audible? Hi.
Yes.
Yes.
Yeah, hi, good morning to all. The question is on R&D. So we saw, in the last 2 quarters, R&D is kind of coming off. It's down 5% YOY 9-month basis. Just wanted to understand, how do we see this for the rest of the year as well as next year? What would be the outlook? And is there any update on the Sandoz pipeline? We had talked about that around calendar 22. We will give some color. So these 2 questions, please.
So, Prakash, I think we talked about it in Kiran's opening remark as well. Our R&D pipeline has been quite robust. We've, in fact, we are looking to get our products into the clinic this quarter. So you will, you're right in noting that our R&D expenses so far have been, more or less, not as high as we would have expected. That's because our products have not hit the clinical stage until now. But this quarter, we are expecting them to be in the clinic, and you will see that there'll be a big catch up in terms of the R&D development investments that we will be making once these products move into the market. In terms of the Sandoz pipeline, we had talked about these products being under development, and we will disclose to the investors once we've reached that stage where we can talk about them publicly.
Prakash, any follow-up questions on that?
Yeah, am I audible?
Yeah.
Yeah, sorry. No, so any outlook we can give for the R&D expense next year, like we always do, about 12 to 15% has been our outlook for fiscal 22.
Chini, you want to respond to that?
Hi, Prakash. We will be in a better position to give you guidance for FY23 as we draw up our full year plan for next year. But yes, we see this trending upwards.
Okay. And is there any update on the RH insulin progress? I mean, I learned from the investor deck that, it is progressing. What are the timelines we are looking at in terms of going to the next level and approval if all goes well?
So in terms of our RH insulin program, there are multiple products that are in the human insulin, I would say, franchise. And we are developing all of these products to bring them to the US. At this stage, these products, we progressed with the soluble product, and we moved that for discussion with the agency. We are working to bring the other products as well to the agency, and we will, of course, discuss in more detail once we're ready to have a more complete conversation on that, Prakash. But we are moving on that, as planned.
Okay. And lastly, a mix of, the conversation we had now. So R&D is going to increase a bit. Cost structures, given that we are, planning to expand in, vaccine commercialization, etc., will go up. At the same time, we have higher value insulin glargine. I mean, on a net basis, I assume it will add more value. So what is the margin trajectory that we are looking for next year, given, we have some big products as well as big scale up of future products?
Prakash, I'll take that. Yeah, for the biosimilars business, we see core EBITDA margins, sustained or improving as we go forward with, both the addition of the vaccines business and the increased mix of developed market sales to our total sales. So those two things will help to maintain and grow our core EBITDA margins. On R&D, I'm not yet in a position to give you specific numbers, Prakash. So,
okay, this is despite assuming R&D expense will increase. We are
the core EBITDA margin is sorry, Prakash. The core EBITDA margin is before R&D.
Okay, got it. Okay, thank you for your answers.
Thanks, Prakash. Next question is from Yash Tana. I thought it was from. Yes, please.
Yeah, am I audible now?
Yeah.
Yeah, so good morning, team, and congratulations on a good set of numbers. So my first question is that Viatris and Biocon, so we have won the litigation against Sanofi for Lantus SoloStar, and we had mentioned in the press release that the market for Lantus is $1.4 billion and Lantus SoloStar is around $5.1 billion. So my question is, so I want to understand the total addressable market for this glargine product. So it would be around 6.5 billion or 1.4 billion only for the Lantus. So that's my first question.
So there are two different products there. We have Lantus is sold in terms of SoloStar as a pen, a pre-filled pen, Yash, and they also sell it as a 10 ml vial, which is also called as Lantus. And Viatris and Biocon Biologics are the only player in the market which has both these products. So we would essentially have a complete offering of products, and we would have the full addressable market
of $6.5 billion, right?
Yeah, those are the full reported numbers. The actual numbers will be.
Yeah. Got it. Thank you. And the second question is a little product specific question. So a drug called Victoza, who sells around $2.8 to $3 billion. So I believe the patent is expiring in 2023, and the API is liraglutide, which I think we have filed in September 2021. So my question is, what is the status on that approval, and what kind of economic opportunity can that present to us?
So let me take that. It's covered under the product is being developed by the generics business. It's a very large product in the US and Europe. And we have filed the DMF and we'll soon be filing an ANDA in the US. And we hope to be in the market in line with the second round of companies will be launching, because there are a couple of settlements for day one launch. So we should be in the market in FY25 for this product.
FY25. And okay. So my third question is around the novel biologic segment. So I went through an interview of the Equilium CEO, Mr. Bruce Steele, and where he mentioned that early next year they will initiate trials for itolizumab for acute GVHD. And if those trials are successful, it will be approved for acute first-line treatment of acute GVHD, which is more than a $500 million market in the US, what he mentioned. And then I went through the Equilium annual report that mentions that there are a few milestone payments that we can receive upon the approval and sale of this drug, which is I think around $550 million. And I think we also have exclusive supply arrangement with Equilium. So my question is, what does the approval of itolizumab present for Biocon in economic terms?
Well, there are milestones linked to the various development stages. So there would be, the amount that you mentioned is for various indications. Now, the first or the most advanced indication is acute GVHD, which is also an orphan indication. And we expect once the trial starts this year, Equilium will be able to make good progress in the next couple of years. And there are milestones linked to filing and approval, filing of BLA and approval. And then there are royalties which are applicable on sales. And we will be supplying the product. The product itself will be manufactured by Biocon Biologics, since it's an antibody. And we'll be supplying to Equilium at a cost plus markup.
Okay. So can you quantify any numbers in terms of milestone payments or anything like that?
Yes, it's a little premature to comment on the payment because we are still a few years away.
Okay, sure. Thank you. These are my questions, and best of luck to the team.
Thank you, Yash. Next questions from Nitin Shakder from Green Capital. Nitin, please unmute your line.
Hi, good morning to the management, and good morning to Mrs. Kiran Majumdar-Shaw as well. I have two simple questions. My first question is in relation to the strategic alliance between Biocon Biologics and the Serum Institute Life Sciences. Does the management feel that in terms of the growth of the communicable diseases and the vaccine market seems to be far higher in the future versus the growth in biosimilars? Can you sort of come into that point, please?
I don't think it would suggest that communicable diseases are much, are likely to grow much faster in terms of the need for vaccines than biosimilars. These are absolutely two separate categories. I think as a company that is focused on global healthcare, up until now, we were really focused on non-communicable diseases. And this pandemic actually shone the spotlight on communicable diseases, which we had not really looked at seriously. And we believe that, in the future, it's important as a global healthcare player to cover both communicable and non-communicable diseases. I think each one of these businesses has its own growth potential, its own growth segments. And we believe that obviously from our business point of view, our focus is on the pharmaceutical and biopharmaceutical opportunities as the primary focus for us as a company. But we also believe that vaccines can add to this focus and make us truly a global health company focused on both aspects of disease.
Thank you, ma'am. My second question is in relation to the specific partnership with Adagio Therapeutics to manufacture and commercialize the neutralizing novel antibody. So I just wanted to get a sense of what are the specific products which are going to be launched for the prevention or the treatment. Does the management have a sense of the product line at this point in time?
Well, the principal product is a product called ADG20, which was a engineered monoclonal antibody for the treatment of obviously COVID-19. And at this point in time, of course, its efficacy on all previous variants was very high. And therefore, it was considered to be a very differentiated antibody. And because it was an intramuscular jab as opposed to a IV infusion, it had a very strong differentiated profile. It had high efficacy with all previous variants, as well as a very differentiated drug delivery profile, which is why we believe that this was a very good partnership, and it is a very good partnership. Recently, they had a setback because the efficacy vis-a-vis the Omicron virus was substantially reduced. However, they have also, shared with in the public domain that the reduction in efficacy of their antibody is no different to that of the two antibodies, the VGSK and the AZ antibody cocktails, which also have shown a reduction in the efficacy to treat Omicron patients. So they believe that they are on par with these other antibody preparations, and they would like to now actually have an adaptive trial design that can actually enhance the dose form of their current dosage to see if they can actually deal with Omicron in a better way. So I think that's the reason why they've had a bit of a halt in their clinical trial program. But having said that, they have indicated to us that ADG20 continues to be a very important opportunity, a very important product. And as you know, the pandemic is not over as yet. We don't know what variant will come next. But at this point in time, we believe that this pandemic does require treatment interventions. And we believe that antibody treatments are a very important part of this treatment required for dealing with the pandemic.
Thank you, ma'am. Thank you for the clarifications. That's all from my side, and all the best for the next financial year.
Thank you.
Thanks, Nitin. Next one is from Samir from Morgan Stanley.
Hi, good morning, everyone. My first question is on Aspart. How are you thinking about the CRL, issued by FDA, and is it connected with the 6 open observations? And by what time do you think you'll be able to resolve this and get the approval?
Hi, Samir. The Aspart CRL was a disappointment for us. Really, we've gone through the CRL letter, and there are essentially 2 aspects to it. The agency came back to us and said that there was a particular diluent. Diluent is used alongside the Aspart vial that we have, and that is given to patients who are of very low body weight, particularly pediatric patients. And they would probably need this diluent to dilute their dose so that they can take that rapid acting analog. And they wanted more information of that diluent, which is essentially water injection along with some excipient. So it doesn't have the product at all. So it's a separate product in itself. So that is something that we have to provide more information to them, which we are working to provide. And the second one was the updates on the inspection that we had provided them in terms of the CAPA responses that we had given them. And they wanted us to provide us a completeness of that data, and we will be submitting that information to them. We have been in correspondence and dialogue with the agency to understand that they would guide on. Something that is currently ongoing. And once we're done with that, we should have a more clearer picture how we will be able to and how quickly we will be able to resolve the CRL.
Yeah, thanks. But just putting these things together, do you think you'd be able to secure the approval in time for contracting for 2023, or there's a risk that we slip into later part of this year?
So the way the was scheduled is that we were looking to be in time for the second half of the year, and we expect to be there with that. We will, of course, know once we interact with the agency, but to give a commitment on behalf of when the agency will decide would be actually going too far. But we are hopeful, and let's see how the discussions progress.
The second question is on insulin glargine. When you have done the contracting already for 2022, how do we think about the volumes and the pricing? Are these open? You just have sort of a broad, umbrella sort of a contract, or are they more specific? If you can share your thoughts around this.
These contracts are drawn up by our partner Beatrice along with the various customers that they've got. So we may not be able to share a lot of detail around it, but these are contracts that are executed for a contracting term, which is in some cases a year, some cases 2 years, which could be defined as such. But we believe that these are we're not looking for a quarter-on-quarter change of situations like this. We believe this to be a sustainable revenue stream for us, a volume stream for us, which is why we've guided that some of these things will be much more steady going forward for us.
Okay, thanks. One final question from my side, if I may. It's on the generic business. So, Sid, if you can just respond to parts. One is, I believe you have spent 600 crores on the Vizag facility. So, what kind of asset turnover can we expect from this, and over what time period? And second is on the PAI inspection that was done a few months back. Any update on that final approval? Thank you.
Sure, Samir. So the asset turn is difficult to quantify because the output from Vizag facility would go both for our API business as well as for our formulations business. And we do have an existing facility in Bangalore. So the Vizag facility will augment that capacity in Bangalore. But as you know, immunosuppressant has been our biggest growth driver in the last couple of years. And we are capacity constrained, and we definitely see a huge growth coming in from this investment. And we will be in the future also looking at adding more fermentation capacity in Vizag, which is beyond immunosuppressant. So obviously being a greenfield investment, there's a lot of infra cost or the capex on infra was included in the 600. But in terms of asset turn, be difficult to quantify. But you can look at our API business asset turn overall was in the range of 1.25 to 1.5. And for the formulations, it's a little over 2. So I don't expect it to be anything lesser than that once fully commercialized.
Thanks to that. And also on PAI inspection?
So the PAI inspection was concluded for our formulations facility. Immediately after that, we received the approval for mycophenolic acid in November, December of 2021. We have a couple of more drugs which are pending approval, and we actually expect to get some of these approvals during the fourth quarter.
Okay, great. Thank you. That's it from my side.
Thank you.
Thanks, Amir. Next question is from Harit from Spark Capital. Harit, please unmute your line. Harit, yeah.
Yeah, sorry about that. Good morning. Thanks for taking my questions. My first question is on Aspart. So when I look at our launches, biosimilar launches in regulated markets in the past, like pegfilgrastim, trastuzumab, and insulin glargine, those were followed by successful launches of these products in India and some of the emerging markets. So for Aspart, can we expect a launch in India in the near term? I see that there are fairly large brands from the innovator in Aspart in India.
So, Harit, we've always developed a global franchise, whichever product we've picked. Now, I don't want to specifically talk about a particular market, but whichever products we've picked, the idea has been to build a global franchise with each of the molecules that we brought to the market. It could be depending on the business cases of a particular market or the specialties of a particular market, that they could be timed differently. But the intent would be to see that it makes sense to bring them across.
All right. Second question is on novel biologics. I see that we've been booking some revenues in this segment. Not a very material number, but 10 to 15 crores in the last 2 or 3 quarters. So what exactly is this related to? Any specific programs? And is this part of the licensing income that we're disclosing?
So I'll take that question. So this is actually intercompany billing that is built from the India to Bicara US, and Bicara being an associate, this intercompany billing does not get eliminated. So the corresponding leg is sitting in R&D cost in a share of loss under Bicara. So this is not really a third-party income.
Okay. No, I think there is also he may be referring to itolizumab sales.
No, Kiran, what he referred is right. This is biofusion billing to Bicara. The company billing.
Okay, understood. Yeah, and last one, again, an accounting-related question. What is our current stake in Adagio? And I'm also trying to understand the rationale for taking the MTM losses through the P&L and not through the other comprehensive income.
Harit, hi, I'll take the question. We got a small minority stake in the business. We have invested $5 million in Adagio. Don't have the specific percentage, but it's a small minority percentage. The thing of routing it through the P&L, we saw this as a short-term investment. and thought we'll take it to the P&L and exit this fiscal. But the price has moved quite a bit, as you saw in Q2. We had gains playing out because of Adagio, and this quarter we have a huge loss. So it's something, I mean, in retrospect, say that we should have not taken it to the P&L, but it is a decision we have made, and we'll be looking to exit from this investment in the near term once the price stabilizes.
Got it. Thanks, Chini. That's all from my side.
Thanks, Harit. The next one is from Vikram Agarwal, SCA Stockbrokers.
Good morning, team. Just one small question. In the recent past, one of the prime reasons why the results had suffered was because of logistical issues such as due to COVID, hospitals in the US were not able to treat, major therapies, like, diseases like cancer and the other things, and delays in US FDA approvals. So what do you think is the situation of these, and can you comment if these problems have abated, or we can expect certain similar problems arising in the future also? Thank you.
Vikram, some of these logistics issues, as I think if you noted Kiran's original, the initial remarks, I think the pandemic really, just when we had thought that it's behind us, it's actually come up with a new variant each time. And each time it's come, it's really impacted the way we've tried to return to normalcy as a community. And, likewise in the US as well, where footfalls to hospitals have continued to be challenged. People try to keep of the non-critical treatments as much as they can. Of course, whatever is critical has to happen. But some of these things have impacted. They continue to slow things down. But eventually these things will have to come back to normalcy. At this stage, we do see some trailing impact of these delays because of the COVID impediments that are there across the world. But I think we are, as a community, we are learning to deal with it. Is the way we would see it.
Great. Thank you, and all the best for the future.
Thanks, Vikram. Next one is from Nithya from Bernstein.
Hi, thank you. So 2 questions, one on Semglee. So Semglee, Sriharsh, you had mentioned that you have the interchangeable product, you have the branded product as well. So question that is Mylan likely to retain the sales force into 2022 as well, or is that something they're retiring? Because I assume your profit share is net of their sales and marketing expenses.
Yeah, I didn't quite catch your question. I think your question that given that we have a 2-brand strategy, what happens to our sales force? Probably my line was bad. Is that the question?
So the question is Viatris retaining the sales force in 2022 and beyond? And the reason I'm asking is I'm assuming your profit share is net of the sales and marketing expenses.
Yeah, so I think in terms of the Viatris's commercial strategy, I wouldn't want to comment too much on that. That's best left to them to address. But clearly, we are looking at Glargine as not just one product, and the formulary having being listed in some of the top formularies, being the end of the line. We're looking at more products to follow. And clearly, we're looking at a larger subscription than what we've got today. So we don't necessarily see this as a be-all in terms of where it is. We're looking at a more wider presence than what we've created. We see this as a beginning. So wouldn't necessarily comment on the sales force increase, decrease specifically. That may be a Viatris specific question, but we see this as a beginning of a franchise rather than just one win or a one product situation. In terms of how our profits are accounted, I'll let Chini comment on that. Over to you, Chini, on that.
Nitya, we had actually clarified in the past, the profit share with Viatris is based on gross profit, and selling and marketing expenses is not a deductible that we share it.
Understood. Thank you. The second question was on Aspart. I think in the last earnings call, Lilly had commented that the Aspart contracting is far more, in fast-acting insulins, contracting is far more complicated. It happens along with premix insulins in a more bundled format. Your reaction to, do you see this as a challenge to adopting your Aspart when it's in the market?
I don't specifically recollect that conversation, but we've not heard of anything specific that could be a challenge that that is specific to Aspart contracting. We do believe that we will have to be there at the table. We also believe that we will have a product which meets all the expectations of the agency and will be amongst the will be the first interchangeable analog as well, rapid acting analog. So we believe we will have what it takes to be approved and be chosen over the competition. So I don't know or I can't recollect any specific challenges that you are referring to.
Thank you, Srihas. I was referring to what Lilly said in their last earnings calls about payer contracting happening in a more bundled fashion along with premixes in the fast-acting insulin category. But that's what I was referring to.
Thank you.
Thank you. Thank you so much and all the best.
Thank you.
Thanks, Nitya. Next one is from Chintan Chheda from Quest Investment Advisors.
Yeah, hi, good morning. Hello, am I audible?
Yes.
Yeah, good morning to the team and thanks for taking my question. So my first question is related to Semglee. So just wanted to understand like up to what level of market share in the US this Malaysian facility can fulfill the requirements at existing capacity. And this facility had some tax benefits in phase 1. So will the same be applicable for phase 2 or future expansions?
I think in terms of the the ability to supply the US market, I think we've got a very good capacity to supply the US market, and we've said that in the past as well that we've got a very we built a global scale facility in Malaysia, which is a very large integrated facility for drug substance, drug product, and pen assembly, and we've continued to expand that facility as well. In fact, today we've also shared that encouraged by the responses that we've seen and the impending Aspart approval in the near future, we will be making even further investments on that site so that we can cater to even a higher market share than we're looking for today. So we're very confident in terms of the ability to supply the market, and we are looking for, in fact, a much more aggressively in terms of volume share as we get into more products ahead of time. So clearly, very strong position on the capacity front to feed the market.
And tax benefits, what were the tax benefits and do they stick if we go further for further expansions?
Yeah, Chintan, I'll clarify that. Yes, we do have very good tax. We've got a long 15-year tax holiday with linked to our phase 1 investments. We are engaged with the Malaysian authorities for incentives supporting the phase 2 investment.
Okay. Yeah, thanks for that. And second question is related to Aspart. So for the EU market, we have the approval in hand. So have we gone for the launch in that market? And if yes, then what has been the performance so far in this financial year?
So Chintan, we've got the approval in the EU, and which is why we're very confident about the science, and which is why we're looking for the right time to launch the product. At this time, we are working. Viatris is working out of the right launch strategy and the right markets to launch in. As I've said before, Europe is not one country, it's a heterogeneous market. And it's about timing of which product to launch in which market. So they are working on putting that commercial strategy together. And given that we've crossed the bridge in terms of the approval part of it, we will be putting together that strategy with Viatris to bring the product to Europe once that's put together.
Okay. Thanks a lot. That's it from my side.
Thanks, Chintan. Next question is from Patrick Stadelhofer from Atlantic Lion Investments.
Good morning. Just one bigger picture question. How do you see the biosimilar partnership with Viatris evolving? And given how important biosimilars are becoming to your overall results, how do you strategically think about your ability to control your own destiny here versus having to rely on Viatris, for whom this is a much smaller part of their business, executing for you? Thank you.
Arun, would you want to respond to that?
Sure, Patrick, if you look at our portfolio of biosimilars, our initial portfolio was partnered with Viatris, and they continue to be a strong partner for us on our initial wave of products. We've also talked about our increased R&D spends going forward, which essentially reflects the progress we've made on our future portfolio, which is not partnered with Viatris. So clearly, as our future portfolio matures, we would be, of course, more, I would say, balanced in terms of our commercial channels, what goes through Viatris and what goes directly, through us. And we talked about making initial steps in building out our commercial footprint in advanced markets through some of the senior hires. And this is the first step towards that destiny that you talked about being completely vertically integrated across R&D, manufacturing, and commercial for our future portfolio.
Thank you.
Thanks, Patrick. Next one is from Vipul Shah from Samangal Investment.
Hi, am I audible?
Yes.
So my question is, what will be the capex for expansion for Malaysian facilities, and what is the financial performance of the Malaysian facilities? What is the capacity utilization? What is the EBITDA level performance? If you can comment, that will be very helpful.
Hi, Vipul. So the Malaysia expansion will come within our overall capex plans that capex spend of about 100 to 150 million per year. So we look to fund the Malaysia expansion within this overall capex allocation. If we look at Malaysia's performance for the quarter, this has been a very good quarter because we had near break-even. As profit shares accrue from the sales of assembly in the US, we see this trending upwards and Malaysia moving to full profitability in FY22.
So a follow-up to that, so should we assume that Malaysia will at least break even from here on for all subsequent quarters and years?
Yes, we strongly believe that Malaysia will be profitable going forward from Q4 onwards.
Thank you and all the best for them.
Thanks, Vipul. Next one is from Ashutosh. Ashutosh, please unmute your line.
Yeah. Can you hear me?
Yes.
Yes. Thanks for giving me the opportunity. My question is, how do you see Biocon different from today's Biocon in next, say, 10 years? Thank you.
So, ma'am, you're on mute.
Thanks for that question. As you know, Biocon sees itself as a fully integrated global biopharma biosimilar company. And I think one of the missing capabilities we have is really to have a strong commercial engine for advanced markets. And I think in the next 10 years, we expect ourselves to be amongst the leading biosimilars companies globally as a fully integrated player in this particular segment with a very large portfolio of products. We expect to have one of the largest portfolio of biosimilars catering to global markets and being dominant in many of these markets, especially some of the key global markets, which are the advanced markets and key emerging markets. That's how we want to see ourselves.
Thank you.
Thanks, Ashutosh. I think the next one is a follow-up from Surya from Phillip Capital.
Yeah. So just to follow on the small molecule side. So this immunosuppression dedicated facility, what we have set up. So with that, obviously, we will have a kind of a meaningful global positioning. So can you just share what is the current positioning in the global market so far APIs are concerned, and the competitive position versus Chinese players, and post this plant, what equation that we can have? And we know that there is a positive trend that is also likely to support that the alternate Chinese source equation, which is a kind of favorable wave, I believe. So given all that, what expectations that you are having out of this immunosuppressant portfolio and let's say even the fermentation capability as a whole that you have built?
Thanks, Surya. I will defer this question to Neil, who heads our commercial for our API business.
Yeah, thanks, Surya, for the question. So, Surya, we already have a very well-established client base on immunosuppressant, and also our clients are well spread globally. And today we have large market share, be in advanced markets, emerging markets, as well as domestic markets in India. And many of our existing immunosuppressants, we are unable to fulfill the market demand. So we believe the additional capacities that would kick in with our investment, it would fulfill those demands, and our leadership market position that we have would become even stronger. And you're right with your thought that while there has been a dearth of capacity for past 24 months, we believe that we would be able to overcome the sentiments against China and get a larger market share than what we have today.
In fact, if I may just add, for the immunosuppressants, in fact, we are working with many Chinese companies to sell immunosuppressants for the Chinese markets. So that's you can understand that if the Chinese companies are buying from India, that shows the uniqueness and differentiated part of this molecule, where there are not many companies locally who's able to get the drug in the same quality that they are able to source from us.
Sure, sir. So is it free from China kind of product category in terms
from a logistics perspective or supply chain dependency, this is not dependent on China.
Sure, sir. Yeah, thank you.
Thanks, Surya. I think this was the last question for the day. We thank you all again for joining us today. If you have any additional question, please feel free to reach out to Aishwarya or myself. We look forward to seeing you again next quarter. Have a good day.
Thank you.